everyone, John Henry here, SlingshotFutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 1st of February, finally out of January. And January, for the most part, honestly wasn't that bad. We are seeing a pretty, a pretty good amount of movement across the board. Today was a little bit slower, but FOMC today, not a big surprise. Before we jump on in, as always, make sure to swing on over to SlingshotFutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From here, you'll be able to register for our newsletter email list, so you'll never miss one of these videos again. Along with that, inside of the newsletter, the email itself, we go over things that we just don't have time to talk about during the video. That'll be different stocks of opportunity and different cryptos, and if it's moving, it'll show up in there at some point. So it's a great newsletter to get your hands on if you haven't signed up for it already. Along with that, make sure to click on the live trade room subscription and trial info, where you can sign up for a free 3-day trial in the live trade room and see what we're all about. It's a really good way to kind of dip your toe and see how we trade throughout the day and kind of get a feeling for how we approach the market. So make sure to sign up for that if you haven't done that either. So jumping on into the markets here, the euro is catching a little bit of a bull lift back up, and as anticipated, pretty much exactly as anticipated, we cycled back off of those highs with that miss on the bottom. So picture perfect in terms of the way that the euro is working out. Now, we are seeing a little bit more of a dip lower, and if we zoom in a little bit closer here, we can see the most recent price action has been very lackluster to the buy side. The buyers have a really good run, but then they give back a lot of it before they try to come back in, and by the time they get back up to the highs, it's more of a twin reversal that dips back down. So we're seeing a sign that we might need to go back down to the lows one more time, and that is the anticipation that we come back and test this 23,695. Now that we have held the near test, not quite a physical test, but a near test of that 23,695. We've pushed back up to the area of resistance. We have shown resistance there as anticipated. Now we're looking for the market to return back down to those lows and complete the objective. And usually when it comes back down to those lows, it could easily get below that by a little bit as well. We have rising moving average support not too far underneath, so it might dip down to something like this before seeing the continuation back up. All in all, through the overnight session, I'm looking for the bearishness to attempt to continue. Even if the buyers do come back in, we have a huge brick wall in their way that's going to try to hold the market down below 24,960. Over on gold, we have a very strong reaction to the FOMC. Now, the FOMC has kicked the market in high gear to the upside. We didn't get quite down to that area of support at 27.5. We did make a new low, so the anticipated secondary leg down technically, I suppose, has been completed, but it certainly wasn't as clean as I was hoping to find. Now, with this amount of bullishness here, one of two different types of scenarios happen after a huge bull candle like this. The first scenario, which is the more probable, this is one that has a much higher probability. You have this big candle, in this case it's a big bull candle, ends up closing really strong, and the market ends up pulling back on itself because nobody wants to buy way the heck up here, hoping that the market goes further. So you end up getting an inside bear candle, something like this, where then the market can buy into, the buyers will buy into the close of that and shove the market back up towards the highs from there. That is situation number one. That is the higher probability of the two. But the other one is simply just continuation, seeing it blow off and really start hammering higher. And if that's the case, that's where you want to take this entire candle by the time it closes, measure that candle up, and use that as your distance objectives to the upside. Right now, that puts us right around the highs here, which does make a good amount of sense. It wouldn't be a surprise at all to see some resistance coming in at around 1360 as the market approaches the highs. Those are the two situations, and really, you know, this candle that's forming now and then the next candle after is going to really tell a big story, because if they do show continuation, then we're looking back to the highs. If they fail the continuation, then you're looking to potentially buy into a dip to then shove the market back up towards the highs. Either way, everything is still pointing to the upside, especially now with a higher low miss of that major support, showing that the buyers are so aggressive they're not even letting it come back to those major levels, and now it looks like we're off to the races on gold again. Over on crude oil, beautiful continuation of the upside. We held the moving average, didn't really do a whole lot at the channel support, either one of them. We did see a little bit of support at the slightly wider one, but it really didn't do a whole lot, so we can get rid of those. Now, the horizontal level of support or resistance that has acted as support after it broke out, obviously plenty of resistance around there, and we're back on top of that level right now. So this major level at 64.91 is something that we need to pay attention to, and it's going to tell a big story depending on what happens here. If the market can get above it and show a good amount of movement above it, then looking for a pullback buy for continuation to the highs makes a lot of sense. I'm already looking for 66 anyway. 66 to 66.50 is going to be the big area of targeting, really, for any buyer that bought into this dip. But if they have a hard time getting through this area, the sellers might need to follow through one more time on this strong bear leg down to attempt the lows, and then from there, we might be able to find those buyers to shove the market back up. One way or another, though, we are still very bullish, and this is the largest dip that crude oil's had for quite a while, since all the way back into mid to early December, and, well, it doesn't look like buyers have hesitated on this opportunity, and they are shoving the market back up. We just got to break through this brick wall at 64.91, and we should be good to go to the upside. In the overnight session, really just kind of waiting to see what happens at 91. Are we able to close above it? If we do close above it, what's the reaction? Does the market want to continue to push higher, or does it immediately fail right back down? Ends up being a twin reversal. If that's the case, then we're waiting to buy on the lows. But all signs point to the upside. It's just a matter of where that upside starts to kick off. On the S&P, we have had a fairly large dip lower. Now, if we were to measure the whole thing, in reality, it's only about a 2%, 2.5% dip off of the highs. It's not like we've shed a ton of percentage, about 2.23% or so. So it's not a massive correction by any means. It is one of the bigger corrections that we've had for quite a while, but it is by no means a big correction. This isn't the correction that I was talking about. I want to see more than this when we're talking about, blasting lower and finding some good prices. For right now, though, in the short term, it is very likely that buyers are buying into this, and I can't really say I blame them. We have a big rally, a big drop to the downside. It's the biggest drop that we've seen since last year, and last year that goes back to probably around August. And considering that fact, the last time we saw that dip lower, if we can use August as any kind of general bias, August's dip did go fast, and it quickly recouped those losses before making another leg down and then grinding its way back up. We might see a very similar situation going into this, but with the overall bullish trend being so aggressively up, it's hard to believe that buyers aren't pumped about buying this for a couple reasons. First of all, this is the biggest pullback that we've had all year, but along with that, we have swing low traps coming in, and we have the first test of the moving average since back at the beginning of 2018. So a lot of bullish continuation to the upside, and buyers are beginning to step in. In the short term, it would not be a surprise at all to see the buyers want to try to get some more continuation back up towards around 28.50. From there, it's going to be a deciding point. Does the market want to break back up to new highs, or are we going to see a larger secondary leg to the downside for a little bit more meat on this pullback? We'll have to wait and see. Now, that's going to do it for the outlook. As always, it's a little bit of choppy water right now, where there's a lot of situations that we're just waiting for more proof. What does the market want to do? All in all, obviously, the trend generally across the board is bullish, and a lot of buyers will be accumulating into this dip. But if you're a little bit more conservative, there's a lot of waiting that has to happen here before we start getting some real pinpointed directions, other than just saying, oh, well, it's bullish, buy it, right? So that's kind of what we're waiting for right now, and well, sometimes waiting is the best trading plan before you start throwing capital on and hoping. We don't want to trade on hope. So that's going to do it for this one. Hopefully you found it useful, entertaining, a little bit interesting, and maybe something you can add to your tool belt. Like we always say, make a plan, trade that plan, follow the rules, and you'll be A-okay. Until next time, we'll see y'all then.